Everyone. Welcome to our VA Loans, the Ultimate Advantage for Military Buyers, our webinar for our monthly series from eMortgage Hawaii. I'm
Hi,
Alex.
Alex.
Hi. This is our monthly series. I'm Alex Provance, branch manager over here in Kona on the Big Island, and then we have our owner Kurt Nielsen, who's going to be presenting today. So our upcoming webinars, our last one was how to get the best mortgage rate. Next one coming up is Lava Zone 2 loans in April, and then we're going to do non-qualified mortgages coming up in May. If you want to register, you can use the QR code in the corner for that, or you can send me an email after this, or just put your email in the chat and I'll get you signed up for additional ones as well. And then I will hand it over to Kurt from here.
And I do want to mention that all of our webinars, and there's been quite a few, are on YouTube under eMortgage Hawaii. So you can go back and look at all of the other, webinars that we've done over the past 6 or 7 months. So they're always there for you to watch at your convenience. So just for those of you that don't know me, I've owned and operated a mortgage brokerage in Hawaii for over 23 years. I've closed 1.5 billion in loans, so we've pretty much seen everything. And there's probably not a loan out there that we haven't had experience with. And I also have an MBA in finance and a Master's of Science degree in economics. So I do follow the market, and we do provide our clients, kind of day-to-day information about the bond market and mortgage rates, where they're going, so we can help them lock at the right time if you're working with us. And it's safe to say that war is not good for mortgages. So the war in Iran has not been very good for rates of the last couple of weeks. So we're hoping that comes to an end as soon as possible. Okay, so let's just talk about what a VA loan really is. And it fundamentally is the best loan that you can actually get. It has a lot of benefits for those who served, lower rates, 100% financing, no mortgage insurance. So it is, if you qualify, it is the best loan available. So any veteran shouldn't look at anything else other than a VA loan. I mean, it's simply the best loan there is available. And they are backed by the Department of Veterans Affairs, and is really designed back in 1944 to help veterans and active duty service members and surviving spouses to achieve homeownership so that they could improve their wealth. And basically, the VA does not give the loan. It just guarantees 25% of the loan amount over $144,000. So for lenders that provide VA loans, they have the first 25% is guaranteed. So generally, if they have to foreclose on the property, they generally are not going to lose any money on the loan. And that is why VA loans actually have a better interest rate than other loans. And the VA loan program has helped over 90 million veterans and veteran families, making them probably the most important and powerful mortgage programs in American history. So it's been going on since 1944. And the keys to a VA loan: there's no down payment required. You can put a down payment down. There is no private mortgage insurance ever. And this could save $500, $600 a month for loans in Hawaii. So if you're not a veteran and you're looking for a low down payment loan, like 5% down or 3% down, or even 0% down, you're going to pay mortgage insurance. And veterans don't have to pay mortgage insurance. And mortgage insurance can be as much as a car loan, $400 or $500 a month. VA loans are specifically for veterans that have served. We're going to talk about how long. Active duty, either 90 to 181 days, and surviving spouses of veterans who have served. So let's talk about who qualifies for a VA loan. There may be more people than you think that can actually qualify for a VA loan. So first, it's veterans who have at least served 24 consecutive months, or they spent 90 plus days in active duty in wartime, or 181 days in peacetime. So it's pretty short, and you could be qualified to get a VA loan. Normally, you have to have an honorable or general discharge. There are exceptions to that. Surviving spouses, a spouse of a veteran who died in service or from service-connected disability, that they retain the VA loan benefits. If a veteran was totally disabled and then died after service, that surviving spouse would also have VA benefits. And then active duty members that are currently serving, if they have served for 90 plus consecutive days, their family can apply for a VA loan. And that's all branches of service. So Navy, Army, the Air Force, and the Marines. So now on the National Guard and the reserves, you have to have served for 6 years in service if you're in the National Guard or reserves, with the exception if you were called to duty for more than 90 days under Title 10, then you will get the VA Certificate of Eligibility. So how do you know if you you qualify for a VA loan? All you have to do is go to www.ebenefits.va.gov and get your certificate of eligibility. You should also get a copy of your DD 214. That will explain to you also your eligibility, but the certificate of eligibility is based on your DD 214. Or you can mail a completed VA form, the 1880, to the VA Loan Eligibility Center. Or you can go to somebody like eMortgage Hawaii, and we can help you pull down your certificate of eligibility. And sometimes the certificate of eligibility can be wrong, and then you need to follow up with a VA if there's incorrect information. For example, if you didn't serve the 2 years that's required because you were injured, sometimes they don't show that you're eligible. But if you were injured and you had to leave the service because of an injury, then you're still eligible. So sometimes you got to get things corrected, and that's easy enough to do. Okay, let's talk about the 6 major benefits of a VA loan. The most important one is you don't have to make a down payment. So it's 100% financing. You can buy a home with no down payment. Now, there are closing costs, and we're going to talk about closing costs. So that's unique. I mean, other loans like FHA and conventional loans, FHA requires a 3.5% down payment. Conventional loans can go as low as 3%. And to avoid mortgage insurance, you'd have to put 20% down. So, obviously the VA loan is a great benefit. It has no private mortgage insurance. And this is a big deal because you can pay $300 to $600 a month in Hawaii for mortgage insurance, depending on your credit scores, on a conventional loan. And veterans don't pay any mortgage insurance regardless of the down payment for the life of the loan. The next most important thing is VA loans carry more competitive interest rates. Typically, a VA loan is going to have a rate 1/2 to 3/4 lower than a conventional loan. For example, right now, VA loans on the 30-year fixed are in the 5% range, where a conventional loan might be in the low 6%. Also, VA loans have more flexible credit guidelines. So there's no minimum credit score set by the VA. Lenders often approve scores as low as 580, which is well below the minimum for conventional loans, which is normally like 620 or 640. So if you have a credit problem, but most often I see that veterans have very good credit scores. They're very disciplined in their credit management, and typically we see that veterans have very good credit scores. But if you have a problem, you can still get through underwriting and receive a VA loan, even if you've had a credit problem. Now, there are limits on closing costs. So the VA does limit certain expenses that a veteran can pay for closing costs. It used to be the veteran could not pay any realtor fees. So if the realtor that is representing the buyer could not charge the veteran any kind of commission. Now, due to the changes in the real estate commission rules, where now buyers have to sign a buyer representation agreement with a buyer's agent, the VA is now allowing reasonable realtor fees to be paid by the veteran. And that's just a change because of the laws, I think in 2024, that changed the way realtors could be compensated. Okay. And the final benefit, and this is the kind of the best one, there is no loan limit. So a lot of like conventional loans in Hawaii have a limit of 1,249,250 to get a conforming loan. VA loans, you can go as high as you can afford. It all depends on what the veteran can afford. Now, lenders do have limitations. So there are a lot of lenders that will only go to 3.5 million or 4.5 million. The biggest one I've ever originated was 4.5 million. And the client was quite well to do, had a great company, and he was approved for $4.5 million 100% loan. So that's another benefit of VA loans. But you have to shop that around because every lender is a little bit different, and that's what we do. We help you with that, find the right lender for your VA loan. Okay, the next thing we'd like to talk about are funding fees. The VA funding fee is a one-time payment that gets added to the mortgage if you don't pay it cash to offset the cost of the VA home loan program for all eligible veterans. So everybody pays a funding fee except for service disabled veterans and surviving spouses of a veteran receiving dependency and indemnity compensation. They don't pay the funding fee. So for those veterans that were wounded during service, they never pay a funding fee, and that's a big savings. The funding fee is the only closing cost that can be rolled into the loan, but also seller concessions can pay some or all of the veteran's other closing cost as long as it doesn't exceed 4% of the sales price. That way, a veteran can actually buy a home if it's negotiated properly to purchase a home with no cash. And we've done it many, many, many times. So for example, let's say a veteran in Kona negotiated a sales price of $1 million for a home, and the seller agreed to that. Well, the realtor that's representing the veteran could go back to the seller and say, tell you what, let's make it $1,040,000, the sales price, and you credit the veteran $40,000 to cover closing cost. That's a way where the veteran could actually have the closing costs kind of built into the transaction. Now, the only thing that has to happen is the appraisal has to appraise at $1,040,000, not $1 million. So as long as it appraises at $1,040,000, then you can build in the closing cost using seller concessions. And we do that with all sorts of clients, veterans and non-veterans, if they are limited in cash to close. And that's just a negotiating strategy that you have to do when you're working with a realtor, a buyer's realtor. they would know how to do that. Okay, here are the funding fee rates if you're not a disabled veteran. So if you use it the first time, you're going to pay 2.15%. So in this case, the veteran that was paying was going to buy a home for $1 million. The funding fee would be $21,500. So it's a big chunk of money, but it does. We are able to roll it into the VA loan. So instead of borrowing 100%, you're borrowing 102.15%. Now, if you put down 5% or more, the funding fee drops to 1.5%. If you put down 10% or more, let's say you sold another property and you got a little cash, then it drops down to 1.25%. Now, if you use your veterans, your VA loan more than once, then that funding fee jumps to 3.3% if you put down less than 5%. So it encourages you to put a little bit of money down because that's a pretty steep fee. Again, it can be rolled into the loan. And the 5% and 10% don't change. They're at 1.5% and 1.25%. Okay. Any questions so far?
None so far.
Okay. So let's look at how a VA loan kind of stacks up to, let's say, an FHA loan or a conventional loan. So first off, the down payment, obviously, 0%. FHA is 3.5%. Conventional loans, the lowest down payment is 3%. Typically, it's more like 5%, especially in Hawaii. And to avoid mortgage insurance, you have to put down 20%. On a VA loan, there is no private mortgage insurance. FHA has 1.75% upfront fee, plus you pay an annual fee of 0.5 to 0.7% every year. And that's for the life of the FHA loan. Now, conventional loans are based on your credit scores, and normally the mortgage insurance is provided by private insurers, and they can range from 0.5% to 1.5%, depending on your credit score. Now, mortgage insurance for conventional loans lasts for at least 2 years and until the value of the property has increased or you paid down the loan so that the loan to value is less than 78%, then you can apply to have the mortgage insurance ended. So hopefully you can get out of it in 2 to 3 years because it can be a pretty stiff payment. Okay, the funding fee, as we said, 1.25% to 3.3%. For disabled veterans, it's 0. FHA, as we said above, 1.75%. Now, conventional loans don't have funding fees. So Fannie Mae and Freddie Mac do not charge a funding fee. So that's good news. Of course, their rates are a little bit higher than FHA and VA. Okay, the minimum credit score, VA loans don't really have one. What we do is we submit the client's file into their system and we either get an approve eligible or we don't. FHA loans, you have to have a minimum credit score of 580. And on conventional loans, generally it's either 620 or 640 minimum score. And for those that have low scores, there's a lot of things we can do with you to improve your score in a fairly short period of time, usually 90 days or so. So that's something that you should manage if you're going to get any loan, is think ahead and work on credit if you've got some credit issues. Now, closing costs, again, the seller can pay all of the veterans' closing costs up to 4%. FHA has some limits, but the seller can also pay. And on conventional loans, you can do the same thing. You can negotiate with the seller to pay closing costs. So all of those options exist for all three loan categories. Okay, loan limits. There is no loan limit on VA loans. FHA has loan limits. So on the Big Island, you cannot get an FHA loan if it's over $586,500. Maui's much larger, 1.299. and this is based on the income of the residents on the island. Oahu is at 828, and Kauai is at 1,110,000. So Big Island is really being, restricted on FHA loans, and it really is a problem that we're working with legislatures to see if we can get this changed. Conventional loans only go up to 1,249,250. The good news is on conventional loans, if you need a loan bigger than that, you can go with a jumbo loan, and rates aren't much different for jumbo loans. So that's kind of good to know. The reuse benefit, VA loans are unlimited. Frankly, so are FHA and conventional loans. You can get multiple FHA loans and multiple conventional loans. So really no limitation there, just on what you can afford and, if you own multiple properties. Okay. So what is the VA loan process? Kind of step by step. The very first thing you do is to obtain a certificate of eligibility, and that comes from the VA website. We can help you get that. So that you need to do that first. We have to know what you're eligible for. And if you've used it before, we got to make sure that if you had paid off a mortgage, that it shows that it's been paid off. Then we complete a pre-qualification. And this is where we work with you to see, one, what are you going to qualify for? And as I mentioned, debt to income ratios on VA loans can go above 50%. Depends on your income and what residual income you will have left to pay for other living expenses. So you can go above 50%, but we have to run it through the VA to see what you'll qualify for. But part of this pre-qualification process is also, what can you afford? What are you comfortable with? And that's important to understand too. I mean, I work with a lot of clients that say, listen, I don't want a mortgage over $5,000 a month. There's just no way I'm going to be comfortable with that. And so that kind of sets the limit. After we pre-qualify you, then you got to work with a realtor, hopefully one that's done loans with other veterans, so a VA knowledgeable realtor, and find the home. Then we get an appraisal, and these are special appraisals. They're VA appraisals. They're a little bit different. The VA is a little bit more particular about the property that you buy to make sure that you don't buy a property that's dilapidated or has health hazards or anything like that. So they're not going to allow you to buy a home with missing windows or a bad roof or missing flooring or exposed wires, anything like that. They're not going to allow you to buy that. It would have to be repaired before closing. Then we go into underwriting, and this is lender by lender. They follow the VA guidelines, and the VA is, again, they're a little more strict when it comes to things that we have to look at. But it doesn't take any longer. But there are very specific things that lenders have to look at that the VA requires. Once you're approved, then you close and move in. The process takes about the same length of time as any other loan. Now, there are a couple of things you should know about. The VA does lend on condominiums, but it has to be an approved project. So we have to look to see if the project that you're going to buy into has been approved either by VA or FHA or USDA. So we do want to know that. And then it does allow you to buy a duplex, a triplex, or a fourplex. So you can buy a property that you're going to live in part of it, but rent out the other part. So you can buy a duplex, rent half of it out, and live in half. So you could actually become a landlord by using a VA loan, but you have to live in the property. So it has to be a primary residence, and there's no exception to that. Okay, common VA loan myths that we just want to make sure you don't feel that being a VA buyer is going to be a problem. So one myth is VA loans take forever to close. It's just not true. It's about the same length of time. We have to look at more things, but it's just part of the process. Now, another stigma is that sellers won't accept VA offers. I find that completely the opposite. I think sellers like selling their home to veterans. So it used to be that people thought they were too complicated, but the truth is VA loans fall out less than most other loans or buyers. So we just need a strong pre-approval letter, knowledgeable agents. And if we have to, we'll talk to the selling realtor or the seller directly. Again, you can use a VA loan more than once. So if you buy a primary residence and then sell that residence and pay off that loan, you can go buy a brand new home, unlimited loan. But you can also, if you decide to move and keep that residence, you can actually have two VA loans at the same time. You're just going to be limited, and I'm going to go through the calculations on that. So a veteran can buy a primary residence, move, and buy a new primary residence with their VA certificate of eligibility. But on the second home, you're going to be limited on how much you can borrow. It's not unlimited. The home has to be perfect. It has to be in decent shape, but doesn't have to be perfect. It's a lot like the FHA, that they're going to want to make sure that there's, flooring, there's no torn up cabinets, there's no exposed wiring, the roof is in decent shape, those kinds of things. And there can't be any like wobbly railings that on a balcony that could fail and somebody could fall off. So they're very much like FHA, and they're going to depend on the appraiser to point things out for them. Okay, just some common questions and answers. Are VA loans difficult to qualify for? No, in fact, in many instances, VA loans are easier to qualify for because they have more flexible guidelines, no credit limits, no loan limits. So a lot of times you're going to qualify for a VA loan when you might not qualify for a conventional loan, maybe a credit score problem. Can you purchase an investment property with a VA loan? The answer is no. VA loans are only for primary residences, but you can purchase a duplex, triplex, or fourplex with a VA loan as long as you live in one of the units. So you could become a landlord and still buy a property that you're living in. Do VA appraisals take a long time? No, they're about the same as other appraisals, but not all appraisers will do VA appraisals. So you have to look for an appraiser who is qualified to do a VA appraisal. Can I use my VA loan benefit if I have a co-borrower that is not my spouse? So maybe you're going to buy a property with a boyfriend or girlfriend. You can still do that. However, the VA is only going to guarantee half of that 25%. So you'll have to come in with 12.5% down payment if you're not married. If you're married, they guarantee that you can borrow 100%. They guarantee the full 25%. Can I roll my closing cost into the loan? The answer is definitely no, except for the funding fee. However, if you negotiate with a seller, the seller can pay the buyer's closing cost up to 4% of the sales price. Okay. And finally, I think I covered this, but if you move out of your primary residence and keep it, can you get another VA loan? The answer is yes, but you're limited to the amount that you can borrow. So on the certificate of eligibility, when you go to buy another home, it'll indicate the amount that has been used. It'll be shown in the entitlement charged column on your certificate of occupancy. Normally that's 0 if you don't have a VA loan, but if you have a current VA loan, it'll have a number in there. And the amount that you can borrow is the conforming loan limit in Hawaii is $1,249,250 minus that entitlement charge times 4. So let's say that entitlement charge is $100,000. Then you can borrow 1,249,000 minus $400,000. So you could borrow $849,000. Good. So kind of VA loans by the numbers. We have served over 90 million veterans since 1944, so it's a big game changer for veterans. No down payment. There are currently 18 million active eligible veterans that could use a VA loan. A lot of them don't know that they're eligible, if you can believe that. There's a lot of them. And remember, you get a lower rate. It's about a half to 3/4 points lower. There is a funding fee, and you can reuse it again and again and again. Once you're eligible, you're eligible. Now, how can realtors win with VA loans? You know, if it can be an underserved market because, again, there's a lot of people that don't know they qualify. So if you're a realtor and you ask a lot of questions and you find out that this person has served either in the military or the National Guard or reserves, you might be able to find them a loan that they didn't even know could get, and you could save them a ton of money. VA pre-approved buyers are financially strong. And I think statistically, they're stronger than the average buyer. A lot of people don't realize that. I don't know if they just seem more disciplined with their credit and the way they operate their lives, but they tend to be very strong financially. Higher price points. So with zero down payment, it frees up cash. So the buyer can afford more home and potentially a larger commission for the realtor. So if they can borrow 100%, then maybe they can buy a bigger home if they can afford it from their income. And certainly if you're a realtor, it's repeat and referral business, just like anything else. You get in tight with the military community and the military families. It's a whole nother source of business. And you can build a reputation as a realtor who honors veterans. It might differentiate you a little bit, who knows? But as long as you get to learn all of the aspects to VA loans, then you can become kind of an expert in that area. And there are a lot of realtors, like on Oahu, that really do specialize on working with the military families. And then you want to partner with a lender that knows VA loans. And we specialize in VA loans. We can provide fast closings. And then we work with hundreds of lenders who provide VA loans. And they're all going to price out differently, and every day is different. So you might have one lender who was good last week on a VA rate, and this week they're not as good. So that's what we provide realtors and veterans. So I think with that, I hope I've answered everybody's questions. If there's anything left, Alex, is there any other questions left?
No questions currently. I was just going to ask if anybody wanted a copy of the slideshow, if they wanted to put their email in the chat.
Okay. All righty. I'll let everybody go. You have a great rest of your weekend. Stay out of the bad weather, and hopefully you get through all the bad weather, at least on the Big Island today. Thanks a lot.
Thank you, Kurt.
Oh, thank you.
All righty.
Thank you so
Bye-bye.
much. Bye.
Bye-bye.